and I think we're ready to fire. Excellent. So what did we have overnight recently with our yens, and how can we look to the future for 2024? Because that's the title of the stream. I'm going to split these up and repost them on YouTube, but this should give you an idea. So last night, Bank of Japan's Governor Ueda, the chances are low that we will flag a rate hike at the next meeting. Okay, the decision in January will depend on information by then. So they're tentatively looking at getting out of negative rates and putting their rates up. Essentially, that is what they're saying. Okay, so that's not telling people that, you know, the comments are before that actually. This is all this morning, just under an hour ago. There is little chance for us to say that we will change the policy next month. So the reason why you're now having a move up in the yens is because people they're not entirely sure that they're going to change the rates. And the Bank of Japan isn't giving much away anyway. So what happens is people say, okay, well, suddenly I'd rather invest in US dollars, or I would rather invest in the CAD against the yen, or the AUD against the yen, or the pound against the yen. And the reason why is because if the rates aren't high on the yen, people don't want to save their money in it, because they won't get high interest on it. Okay, so that is what has caused all of that, and that's why it's really important. Because if you don't have that information and you don't know where to get it, you don't know how to read it, you're going to find that it causes a lot of problems. Largely within my method is sentiment. It's adjusting risk, and it's understanding how sentiment creates the natural market trajectory for long periods of time. So just remember that and bear that in mind. Particularly for your yen, you're coming up. I've now put in short orders today about 144. I will tell you where. 1445 area. I like it short. That is going to be my first entry. I'm not going to dive in. I'm not going to go mad. I'm controlling my risk. You know, lots of you who are either in my academy or watch me frequently know I'm very, very risk management orientated. And I'll just tentatively, lightly scale in as we go up. And I will do it amongst the guidance of my key moving averages. Now, it's not the case that I'm just seeing lines and saying, you know what, I'm going to short at those. They look pretty, they're colourful. It's more the case that I'm gauging value over time. But yeah, so the near term, I prefer it short. I think this impulse won't last. I think the Bank of Japan is just saying that because, you know, they don't want to spook markets. They know if they say too much, you'll either go like this or you go like that. And they don't want anything like that. The reason why their currency has been so badly affected, or at least devalued, to be honest, it's probably what they want because Japan's a big exporter. You know, it's driven the price up like 50%. And that's why I called it short there. If you had that, great. And I called it short there again, because that tells you that people, or investors, traders alike, are sick of holding it long. They want their money, they want to take their profits, and that's exactly what they do repeatedly. That's what gives you probability in markets. It's the repetition. It's the occurrence of the same thing again. Okay, so you had that, and that's why you had that larger fall. Now, what you do have at the moment is a rise to early weekly resistance, and then you've got more resistance higher up. So I would probably, if you're swing trading, and you're a bit more risk averse, I would probably hold off your next short until 147.03 from 144.5. That's at least probably what I will do. I'm not going to rush in. I may reshort again up here. I'm not desperate. Okay, you should never be desperate trading financial markets, because the minute you get desperate, it adjusts your emotion. Your necessity gets really, really honed, and you just enter whatever you want. Generally, with yens, I like to drop my size because of their policy rate. Effectively, their policy rate means they're so different to everyone else, and you get this big surge. So into 2024, and it looks like the trajectory of their interest rates is going to go up. People are going to save their money in the yen. I wouldn't be shocked if you do reach there in January, but I would say it's reasonable that you may come back to your 100 MA. I think inevitably that is going to occur anyway. But But into 2024, my goal really is just to continue to short the yens. And you'll note how I just drew that line up before down, you see? And the reason why I did that is because I'm reflecting the natural market move. Look at the last fall. Can you see how it comes up before it drops? You've got to be shorting the pops in the market. And then when the market falls, you can get long. You should never be buying after the move or selling after it. You really want that. So that's why I've drawn that kind of shape, because that's what's required essentially for this. Okay, so your dollar yen, I'm looking to short for the long-term market. So if I just go on to something else, let's say the Swiss yen. I like the Swiss yen quite a lot at the moment. Now the policy rates are a bit different, but you have got very key areas of resistance. You're coming back to your key moving averages, so you come under them and you come back to them. Price is average. Funnily enough, that's a W for Will, perhaps. But anyhow, you're shorting the impulse, really. I don't think that is going to hold. A lot of my method tells you about what you've seen previously and judging the future, like I said. So I don't think your area of support will hold. I think that is only going to be hit so many times until this happens and you end up in line with your 200 MA. I wouldn't be shocked at all. Now, the reason why I wouldn't be shocked is because, as you'll know again if you follow me, markets eventually retrace largely. The bigger the rise, the bigger the fall. It's like the saying that the bigger they are, the harder they fall, isn't it? But you would expect to return to your earliest 20 MA. And that would be very ideal to scale in for new longs in a risk-averse stance. Just so happens that area I've labelled is likely to line up with this 100 MA because it will move up as price squeezes together. Okay, so I don't think you're going to last long here. And I think ultimately, if you're somebody who wants to buy, you've got all this lumpy support there. Do it in a risk-averse stance because you're still quite high, but that would create your levels for entry. Okay, so my yen bias still into 2024 is looking to short these yen pairs. I'm short already anyway, but that's just an extra clue on it. Similarly, your CAD I like a lot because you've got really, really hard resistance there, coming straight to it, coming to key MAs, many of them. I really like your CAD for tech zones, and I would expect perhaps you'll arrive around there. I think that's going to be very, very ideal for any exits. You could perhaps flip lightly long, but I'd be a little bit wary. And of course, it's the same. Now, if you're going to be trading all these yens, I wouldn't really suggest doing all of them. I think you're massively going to over leverage. In many cases, just pick one, okay, maybe two. I often advise that, and I advise various different risk plans within my academy for yens, simply because they're effectively almost HVAs. They go for a long time in one way because of that policy rate and the stance of the economic zone, Japan being a heavy exporter. So that's it for yens. Get my free training underneath, like I said.